Okay, welcome ladies and gents to the latest weekly report update for the 2nd of March 2015. And of course the risk warning, there it is. All trading does involve a risk of loss, may not be suitable for you. Past performance is no guarantee of future results. Okay, let's have a look at the charts. First up, the index to see how we're travelling in the broader picture there, and there you go, hitting new highs today on the market, getting quite close to that very important 6,000 level. The August-September highs of last year, you can see around that 56.50 mark, and our market's been relentless in pushing up from that level up towards 6,000. What was the news over the weekend? Particularly, we saw European stocks continue their QE-driven gains, the modest gain in a succession of multi-year highs. We also saw the US bourses ending February with their biggest monthly percentage gains in more than 2 years. S&P up 5.4%. That was after a lackluster January when US stocks posted their biggest monthly losses in a year. So the US and also Europe obviously gaining some solid ground there, the amount that we haven't seen for a long time. I suppose the main big event news that happened over the weekend was that China sprung a surprise 0.25% rate cut upon the market on Saturday. So there's just the ongoing debate of whether bad news is still good news. So the move is to keep real interest rate levels suitable for fundamental trends in economic growth. So with China easing a little bit as well, that goes along with the global theme of central banks and their easing or their quantitative easing policies. Okay, turning more over to our specific trades, and we had quite a busy week last week. With covered calls and spreads. The covered calls were the winners amongst the lot. There were 4 trades that expired, all at their full profit: NAB, Medibank Private, Santos and QBE. And we did have a couple of spreads that were at the opposite end there. That was Wesfarmers and CBA. Those 2 trades recording a loss. So we'll have a look at those in a moment. Well, let's look at the options only. We'll mix it up a little bit more differently this time around. And CBA, so we did have 2 bearish trades last month, and that was CBA and Wesfarmers. CBA just looking like once it broke above that $87 mark, it has no boundaries there. And even though it did have paid its dividend back 2 weeks ago, dropped to 90, is going stronger again. So looking like a reasonable opportunity to perhaps accumulate shares on the bullish side of CBA now that it's broken beyond that 91.50 boundary there. Just move that chart in a little bit. CBA and Wesfarmers. Wesfarmers looking rather weak, but it wasn't weak enough in time. We seen it go down to $43.12, which was under our 43.22 strike. So just another 2 more days would have had a bit more value in that option, but alas, timing got the better of us there, and perhaps that stock might be heading slowly back down to $41. We'll need to wait for some confirmation to see there, and perhaps get into it with a bit more time to spare. Okay, looking at other trades there, we've got Santos, which continues to stay strong there. Santos, one of the cover call profits there, as it closed above $7.75 last Thursday closed at 7.95. So entered again on the bullish side as a covered call, and that particular position doing quite nicely. We've seen a bit of a bounce in the shares. Same can't be said for Woolworths. It reported on Friday, and we've seen it record quite a negative result there. Now, whilst the dividend was up, underlying net profit also up, the full year guidance was lowered, and that had an effect of an open correction of down 10% for the share price on Friday. Looking at Qantas after its report did do rather well. That's it. We entered that particular trade, I think it was on Tuesday. Wednesday it shot up to $3 and has pulled back a little bit since then. But that trade doing quite nicely at about 2.5% in the green for Qantas. So that call option was sold at the $2.80 level. So buying around the 270 mark, we were able to capitalize on a bit of capital gain and also sell those call options at a solid premium. Right, what else do we have bouncing around the place? Let's have a look at Rio. Rio's option trade from early last week. I think this went out on Monday. Up about 10% on that trade. Bought the 55 December calls after a initial pullback on Tuesday. Back into the green on Friday and consolidating on that base and pushing up to hit about a 6-month high today, which is a solid signal there to the upside. Telstra, we've got the diagonal spread there and in a small profit around 3%. Really just want to get some time decay kicking in for the current period. That trade we entered 139.5 and currently at 142. Telstra did have a dividend, so that explains that gap action there. What else do we have? We've got Santos up about 35 to 40% on Santos. Oops. There we go. We're above the $8 mark. We've got the 701s to 8s. This was set up in, I think it was on this, around this dip here. It's definitely below $8. So we've seen a nice surge and a bit of a pullback, and right now on the 2nd of March still above $8. So just wanted to consolidate there and ideally go up and give us a bit more profit margin there, room to move. Alright, so I'll wrap it up there, ladies and gents. Just a nice quick one. We'll be focusing more on getting some covered calls up and running. The expiries last week have led to 9 profits in a row for the covered calls. So with a bit of cash back after the expiration, we'd like to reinvest that and build upon those solid profits there. And with spreads in general, I want to see a bit more consistency coming back, like what we saw mid to late last year. A bit more consistency. However, saying that, the market has been a bit more challenging for the spread trades, i.e. getting stopped out has been quite frustrating. So I might look at increasing the distances to stops, perhaps lowering the exposure and also perhaps the position sizing there till we get a bit more consistency back. I'd like to see us running where we were middle to early last year, where we also had a 9 in a row solid profit run there. So that's the kind of form that we want to get back into, and hopefully it's just around the corner there for you all. Right, I'll wrap it up there. If you have any questions, feel free to give us a call. More than happy to help, and have a great day. Thank you for your time.